Good afternoon, everybody. Welcome to Liberty Call. Today is Monday, June 5th, 2023. Hope everyone's having a fantastical day out there and hope you had a good weekend. My Astros took 3 out of 4 from the hated Angels, but blew it yesterday. It was unfortunate, but they didn't give up a lot of runs, but just could not get any offense and get anyone across the plate. So anyways, if it's your first time watching Liberty Call, I'm glad you're here. We're going to talk about what's going on in the world, the weekly economic update, which comes out every Monday. And we'll talk about the markets and some other stuff. So if it's first time watching, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I would greatly appreciate it. Let's go ahead and jump into the numbers for today. The Dow Jones was down 0.59%, 199 points, closed at 33,563. S&P 500 was down 0.19%, closed at 4274. NASDAQ down 0.09%, closed at 13,229. Yeah, both the S&P and the NASDAQ really took a plunge. Let me bring up where'd my chart go? Here it is. Let's go to the minutes, and you can see here where the S&P 500 around about 110, 111 Eastern time started to fall, and then it really took a jump here around 2:30 Eastern. Same thing with the NASDAQ. The NASDAQ, same slope down, and it just significantly dropped all of a sudden. Both of these indexes did basically the same exact thing. NASDAQ did finish up in the green today, but it was the Apple stuff that came out about the goggles. Somebody was claiming online that was the reason for the big fall. So, all right, let's jump back into the numbers. The VIX was up today 0.96%. It's currently at 1474. Let's see here. Canada was down 0.46%. Brazil was up 0.23%. Mexico was up 0.57%. Over in Europe, Germany was down 0.54%. UK was down 0.1%. France was down 0.96%. Netherlands down 0.21%. Spain down 0.3%. Italy down 0.78%. Switzerland down 0.25%. And Portugal down 0.22%. Russian exchanges both in the red. The MOEX down 0.93, the RTSI down 0.3. And the overnights in Asia, the Nikkei in Japan was up 2.2%. Australia was up 1% even. New Zealand was down 0.26%. In China, the Shanghai was flat at up 0.07%. The Shenzhen component down 0.47%. China A50 down 0.5%. DJ Shanghai down 0.16%. And the Hang Seng up 0.84%, and it looks like the Taiwan weighted was flat at 0. All right, so that was the markets for trading day June 5th. So let's go ahead and jump on over to the weekly economic update and see what's going on there. Stocks surge higher in the closing days of a holiday-shortened trading week, ignited by a political resolution on raising the debt ceiling and a strong employment report. The Dow Jones Industrial Average was up 2.02% for the week. S&P 500 advanced 1.83%. NASDAQ was up 2.04%. And international slipped 0.52% for the week. A sigh of relief. The weight of uncertainty over negotiations to raise a federal debt ceiling was lifted last week by the news of an agreement between President Biden and House Speaker McCarthy and its subsequent passage in Congress. After a modest gain on Thursday, following the House vote, stocks rallied on Friday, responding to the Senate passage of the debt ceiling bill, which eliminated a significant overhang to the market. A robust federal employment report also contributed to the Friday rally. The report exceeded market expectations and growth of new jobs, while reflecting a deceleration in wage growth. The irrepressible labor market. Last week's employment data showed that the labor market remained stout after over a year of sharp interest rate hikes. Job openings in April increased to more than 10 million, reversing 3 straight months of declines, while private sector employment increased by 278,000 jobs in May, according to a survey from ADP, a significant payroll processor. In line with these strong numbers, the Department of Labor reported 339,000 new jobs that were added in May. This came above the consensus estimate of 190,000 and marked the 29th consecutive month of positive job growth. Economic data coming out this week. Today on Monday, we have factory orders and the ISM Services Index, and then Tuesday we have jobless claims. It should be Thursday, I think. The companies reporting earnings this week. Just have 3 companies. Tuesday, we have J.M. Smucker. Wednesday, we have Campbell Soup. And Thursday, we have DocuSign. All right, so that's everything coming up for the week. Let's go ahead and dive into the market recap for today. See what they had to say there. S&P 500 turns red as Apple eases from record after unveiling Vision Pro headsets. The S&P 500 experienced a flat trading day on Monday, with Apple relinquishing earlier gains after reaching an intraday record high following the unveiling of its anticipated virtual reality headset. So, and I think it's like $2,000 or $3,000. Yeah, $3,500. It's right here in my notes. Apple introduced its mixed reality headset, the Apple Vision Pro, which will be available starting at $34.99, with deliveries expected in early 2024. Wow, who's going to spend $3,500 on a headset just to play video games or whatever? The company also announced the release of a new 15-inch MacBook and expanded its chip lineup with the higher-end M2 Ultra chip, completing its transition away from Intel chips. While Apple initially saw gains, it later retreated from its record high. Analysts at Wedbush estimate that around 150,000 units of the Apple Vision Pro will be shipped in the first year due to its high price point. Other tech giants also saw positive movements, with Alphabet experiencing a 1% increase and Amazon and Microsoft also in the green. In the energy sector, struggles arose as oil prices gave up some gains due to persistent concerns about demand outlook, despite Saudi Arabia's decision to reduce production by an additional 1 million barrels per day. Furthermore, 9 OPEC Plus countries agreed to extend production cuts through December of 24, which had previously been set until December of 23. Goldman Sachs commented that these decisions by OPEC Plus should be considered in the context of weak sentiment and positioning in the market. Palo Alto Networks witnessed a more than 4% increase as it was announced that the software company would replace Dish Network in the S&P 500 starting on June 20th. On the other hand, Target Corporation experienced a decline of over 2% after being downgraded by KeyBank to sector weight from overweight due to concerns about upcoming consumer headwinds. In cryptocurrency space, Securities and the SEC filed a lawsuit against crypto platform Binance and its CEO Changpeng Zhao, alleging violations of securities laws. This news had a negative impact on various crypto-related stocks, such as Coinbase, which fell 11%, Riot Platforms down 8%, Marathon Digital Holdings, which slumped 9%. All right. So that's everything for the market for today. Got one more article to cover with you. It comes from our friends over at First Trust, Mr. Brian Westbury, their chief economist. This is titled Jobs with Little Growth Means Less Productivity. See what he has to say. The landscape during and after the COVID-19 pandemic has been described as unprecedented. Lockdowns were implemented, trillions of new dollars were printed to finance additional government borrowing, and people were paid not to work. That's always a good plan. However, the situation seemed to have changed. The Federal Reserve has raised rates. M2, a measure of money supply, is declining, and payments to unemployed individuals have ceased. The consequences of these policies are difficult to predict, as we have never experienced them before, but a recession appears almost inevitable. Despite this outlook, the markets seem unfazed. The S&P 500 surged 1.5% after the release of a strong jobs report, with signs of moderating wages. Non-farm payrolls increased 339,000 in May, and the U.S. has added 1.57 million jobs so far this year, indicating a 2.5% annualized growth rate. However, despite the increase in employment, real GDP has only grown by 1.6% over the past year, indicating a decline in productivity. These contrast with optimism surrounding artificial intelligence, which is believed to boost profits and economic activity. Economic indicators further paint a challenging picture. The ISM Manufacturing Index has shown contraction for 7 consecutive months, and gross domestic income has declined for 2 quarters in a row. GDI is a counterpart of GDP, measuring income and income to revenue received by individuals. While real GDP rose at an annualized rate of 1.3% in the first quarter of 23, real GDI fell at a 2.3% annualized rate for the second consecutive quarter. The pandemic's impact on different sectors is evident. While companies like Amazon saw significant growth in in employment, particularly in transportation and warehousing. The services sector, such as hotels, restaurants, and bars, suffered the most. Jobs in leisure and hospitality industries remained below pre-lockdown levels, with a shortfall of approximately 350,000 jobs. Although these sectors are now recovering as pandemic employment benefits end, the mix of jobs is shifting towards lower hourly pay positions, potentially affecting wage growth. Looking ahead, Mr. Westbury questions whether further growth will come from, or where further growth will come from, as it is unlikely for individuals to double their consumption of certain goods and services to make up for missed opportunities during COVID-19. Consequently, the economy may be returning to pre-pandemic levels, but sustained growth appears challenging. The author predicts a recession within the next 12 months, and while this may be seen as a solution for inflation, the declining productivity casts doubts on its effectiveness. Despite these concerns, the market seems to be overlooking economic problems and challenges that are evident in the data. Mr. Westbury suggests that the economic pain and issues are being ignored, potentially leading to unforeseen consequences. Dun, dun, dun. Yeah, I have to agree with Mr. Westbury on most things. I don't think we're headed towards smooth sailing or smooth seas anytime soon. Probably going to be heading through a few squalls and maybe a tropical depression or storm along the way. But, like I said, it's going to be a rough ride probably this year. I know things seem calm right now. The jobs numbers look good. Everyone seems fine. But I think it, just seems like one little push and everything's going to just start to snowball. It's kind of like the big sand pit or the big sand piles at like quarries and stuff. The sand goes up the conveyor belt and it drops and drops and drops, builds this big pile. And eventually you come to a tipping point where just one little sand grain falls forward and then everything just collapses. So I think that's kind of where we're at today. But, it's too soon to tell before things really start to pick up momentum. So my advice, be careful out there. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening and I'll talk to you next time. Adios.